What is going on, investors? Back again. Time to take a look at JP Morgan Chase, one of the largest banks in the world. Ticker symbol JPM. Year to date, this stock's been ripping higher, up 21%. But we really see over the last month, this stock has been consolidating sideways. We'll jump over to the stock chart and we'll talk about this type of formation, what it could mean, what are the probabilities, what are the possibilities that the stock could do at these levels, depending on which way you're looking to go in this one. Now, like all the bank stocks, they have been ripping higher in part because interest rates have been ripping higher as well over the last year or so, or really the last 6 months in particular. Now, they've been consolidating sideways a little bit. When we jump into JP Morgan's Q1 results, we're going to take a look at two things. Number one, the results themselves as they relate to JPM. But if you watched my Wells Fargo video, when I analyze these banks, I like to take a little bit broader view because the banks give you insight into the consumer. They give you insight into businesses as well because they lend money to both consumers and businesses, at least JP Morgan does. And so when you see data on that, it can give you insight into that because believe me, if the consumer's not doing well and business is not doing well, then chances are the economy here in the United States is not going to do well as well. Now, it was a nice quarter for JP Morgan for a number of different reasons, but I thought what was interesting was Jamie Dimon's comments. He says, with all the stimulus spending, potential infrastructure spending, continued quantitative easing by the Federal Reserve, strong consumer and business balance sheets, and the euphoria, I thought that was an interesting choice of words there, around the potential end of the pandemic, we believe that the economy has the potential to have extremely robust multi-year growth. So Jamie Dimon sees that consumers have nice balance sheets, businesses have nice balance sheets, and we're on the cusp of possibly returning things, quote unquote, back to normal. Now, we're going to take a look at a couple different things here, just broadly here with JP Morgan, and then we'll dissect into two of their largest divisions here, the consumer banking and the investment management business. We'll take a look at that. And then we'll jump over the stock chart and we'll see the possibilities of this stock going either higher or lower in the coming weeks and months ahead. Now, what I thought was interesting is they had the credit cost net benefit of $4.2 billion. So $4.2 billion basically flowed to the net income side, or at least the profit side, because they took away $5.2 billion that they had set aside. So JP Morgan, like all the banks last year, started setting aside money because they were worried people were going to default on their credit cards, their car loans, their home loans, the business loans, whatever it is. So they set aside $5.2 billion because they said, well, we might need this money to cover these loan losses. Well, it turns out with the stimulus and things like that, that wasn't needed. Now, they did have a $1.1 billion of net charge-offs, but it was less than what they assumed. Now, average loans are actually up only up about 1%. This is, company-wide, JP Morgan-wide. When we see here's the CCB is the consumer credit. So average deposits are up 32%. So the average consumer, at least the one that has an account with JP Morgan, this is not including people that are underbanked or don't have a bank account. This is probably a more affluent client, affluent American, so to speak. Their deposits are up 32%, but their average loan is actually down 7%. So we're actually seeing a deleveraging from the consumer. Okay, they are actually saving more money and borrowing less money, or in some cases just paying down debt in those cases. Now we're seeing that too in businesses as well. So businesses are taking less loans. They have, it's interesting what is happening, and we can see a little bit more granular detail when we jump into the numbers. So here's the consumer and community banking, CCB, as JP Morgan has it, and we have net revenue here. This is their biggest business, and it is the driver, in my opinion, of the stock in most cases. Now we see net revenue here. So we've got quarter over quarter here. We got 4Q over 1Q, and then this is year over year. And as you recall, the first quarter of last year contained a month or so of things getting bad, some really uncertainty. So net revenue is actually down quarter over quarter and year over year as well. We see here for consumer and business banking, it is also also down year over year and quarter over quarter as well. Home lending, there is a bright spot there. As most of you know, if you're trying to buy a house, I feel very sorry for you. It is a terrible time to buy a house. It is probably a great time to sell your house if you need to. Now, home lending basically flat over the last quarter, but it is up marginally over the last year as well. Probably more to do with the prices rising than strong. There is strong demand in housing, but I think that is, trumped by the fact that you have very large increases in pricing in most markets. Now, card and auto, this is credit cards and autos. We're actually seeing again a decline year over year and quarter over quarter, essentially flat, but we are seeing a decline there as well. Again, consumers are not necessarily taking on more debt on the credit card side or the automobile side. We're seeing a little bit on the home lending side as well. So that's really interesting. So they have their non-interest expense here as well. These are all expenses not related to interest. And then here's the provision for credit losses. Okay, I told you last year that businesses or banks like JP Morgan started setting aside huge amounts of money because they weren't sure if people are going to default on their credit cards, their auto loans, their home loans, things of that nature. So they set aside $5.7 billion in Q1, and they set aside even more money in the subsequent quarters. Well, they've started to take that money back because their computer algorithm, their analysts have decided, well, we're probably not going to need all that money for loan losses. And so they start adding it back into the balance sheet. The way they do that is they actually put the parentheses around this. This is actually, while it shows here as a negative number, it's actually positive when we take a look at net income here. And so notice we had this massive $3.6 billion that was basically added back in from provisions for credit losses. This positively impacts net income because I just showed you, look, net revenue basically flat to down across the board, but look what happened to net income. It went from 4.3 billion all the way up to 6.7 billion. Again, this is credit losses. Okay. Then this is temporary. The provisions for credit losses will run out. Okay. You can't just constantly pour that money back onto your net income side. So it's in subsequent quarters, this company is going to have to grow revenues. And we saw in the last year how much those provisions for credit losses just killed the net income. I mean, net income went to 197 million because they had this massive $5.7 billion charge here, at least on the consumer banking side. And so it hurt the balance sheet or hurt the profitability of JP Morgan a year ago. Now it is helping it to a massive degree. At some point, these things start to equalize, and the stock will have to trade on its own. We'll see what happens there. Now, from a corporate and investment banking side, this has just been a growing business because we see here, take a look at net revenues, just absolutely phenomenal. Some of this is due with, I think some of it has to do with the SPAC investments, but you just have a lot of corporate and investment banking activity right now, and that is a bread and butter business for JPM. They just make a lot of money as we move through here. Take a look at the net income side here, $5.7 billion. That is, almost as much as what we're doing on the consumer side as well. Just a massive business for them. You see quarter over quarter basically flat and year over year up considerably. Again, some of that has to do with this provision for credit losses, but actually this is a very, very healthy business because you see net revenues went from 10 billion up to 14.6, and they're up even 3 billion over the fourth quarter. So we'll see if that is continue. I tell you what, a winning combination for JPM is this this corporate and investment banking activity continue. You have IPOs, you have mergers, that type of stuff would be very, very profitable for JPM. And then on the consumer side, you start getting consumers to borrow money again, open credit cards, buy new cars, go buy more houses if they're available, and that type of thing. So we'll see if that materializes in the coming months because that would help surge JPM stock even higher than it has. Now, this stock has been on fire. Okay, we talked about how this stock's up 21%. The dividend rate should go up. We're getting a 2.3% yield on this one, $3.60. This is a company that can pay even more than that. They'll probably execute a buyback as we move through the year. They've already kind of done that. I think that could accelerate these. They have solid earnings. They were able to pull those provisions for net income, provisions for credit losses, put those on the profit side. They'll be able to use those profits to buy back shares, increase dividends, those type of things in the coming quarters and years ahead for JPM. Now, in terms of stock price, this thing's consolidated sideways, and it's really in a nice spot, in my opinion. Okay, we have a convergence here of this moving average and this green. Okay, this is a nice upward trend, but then we have a nice support level. I like these setups. Okay, when you have kind of a convergence of two different levels of support, a moving average, and then just a natural spot where the stock has just kind of had buyers step in. Well, those two areas converging right at 149, that's only about $4 away from where the stock is. So any pullback into 149, in my opinion, could be a nice buying opportunity for JPM. Now, we have seen resistance, sellers step in here at 157 or so, a break above 157 on a nice green candle. And look, you're probably coming to the 160s and higher on this one. It's just like anything else. We've seen it with Bitcoin. Bitcoin had a nice little high resistance point of 60,000. Once it broke that, well, it went to 62, 63 really quick. Dogecoin even had a nice little resistance level there at 9 cents. Once it broke 9 cents, boy, oh boy, it went to 13, 14 cents, which is a big move, which is, 30, 40% move on an equity or in that case, a cryptocurrency. I think you could see the same thing happen with JPM. Okay, we could come down here and test 149, not necessarily get all the way down there, but anywhere in the 149, 150 range would, in my opinion, be a nice little buying opportunity. Wouldn't necessarily be a spot I go all in at, because if you do break this 149 level, well, look out below. You're probably coming down. You could come down to the 145s, 140s even, depending on how things are materializing in the market. But do like these setups. I do like this company. I do like this stock. And I think it is a nice little buy and hold investment. Now, if you don't want to pick winners or losers, you do have the ETF. The XLF is probably the most popular, the most liquid, the one with the most attention on it. And it has been in an uptrend, and it is holding this uptrend, and it is just continuing to churn higher. So that is what I see with JP Morgan. That's what I see broadly with the banking sector. It is one that if you don't have any exposure to banks in your portfolio, I think now's a time to add just little bits and pieces of them over the coming months ahead, because if we do have a resurgence, like Mr. Diamond says, well, guess who's going to benefit quite a bit? The banking sector. So hopefully you guys enjoyed this video. We'll be back with more in the coming weeks. Good luck with your investments.